If you have ever tried to learn a new language, the subject of today's video will probably be familiar to you. Duolingo is one of the fastest growing educational apps over the last few years, and I believe the company has a lot more in store than just helping people learn a new language. This future disruptor would start in 2009 at Carnegie Mellon. Severin Hacker, a computer science postgrad, and Luis von Ahn, Hacker's graduate advisor and professor, originally set out to build an application to translate websites. In the course of working on this project, Hacker came up with the idea for Duolingo, a 100% free way for anyone to learn a new language. During the initial beta test in 2011, Duolingo would have hundreds of thousands of people sign up. The app would be released to the general public in 2012 and would soar in popularity, rising to become the top educational app on every app store. Just a year into the project, Duolingo would accumulate over 5 million users. Using this success, the company would raise hundreds of millions of dollars to expand the platform's reach. And expand they would. By 2017, the platform had over 200 million users, and the company was valued at $700 million. But there was a problem. Duolingo didn't have any revenue, so the team set to work using machine learning models to slowly add monetization to the platform in the most effective way possible. The ability to monetize catalyzed growth, and just a handful of years later, Duolingo would go public at a nearly $5 billion valuation. Today, Duolingo users have the ability to learn 40 different languages from all over the world, and some that are hen bis vis. Of course, these users need to be disciplined in their approach to learning, much like how investors need to be disciplined when it comes to investing. Becoming more disciplined can help us in plenty of different areas. For example, one of my favorite companies right now is Ally Bank. The only problem is, I have no idea how to value a bank, so I've committed to expanding my circle of competence in hopes of one day investing in the company. Discipline not only can help us learn more parts of the market, but also give us the ability to hold during serious drawdowns. Again, using an example from my portfolio, right now Intel, one of my largest holdings, is down over 50%. While it has been hard to watch the steady march down in price, I have the discipline to remain resilient and even add to the position, as I believe the thesis is still intact. A third area of investing where discipline helps us is in the decision to buy. I believe that every investor should have a process for buying a stock and should stick to that process no matter what. Whether that is a value-based free cash flow model or a high-growth GARP model, all the way down to a shorter day trading time frame. Develop a framework of rules and use that to make decisions, and be disciplined enough to not let emotion get in the way. And speaking of a process for investing, let's get back to mine and take a look at Duolingo's financials. Since the company hasn't been public that long, we only have the last 3 years of data, but what a last 3 years it has been. Revenue doubled, then grew 50%, and is on track to do another 40% this year. Shares outstanding only have 1 year of data, but the dilution has been around 10% over the last year, which is expected of a new high-growth tech company. Still not good, but expected. Perhaps the most surprising so far is free cash flow. It's positive. Negative in 2019, but since then, positive. Great to see. Unfortunately, given that Duolingo still isn't profitable, their return on invested capital has been negative, which is disappointing, but again, expected. Where Duolingo really shines is debt. With nearly $600 million in cash, they can pay off all of their debts totaling just over $150 million. And as for dividends, there aren't any, mostly because Duolingo is still losing heaps of money. Overall, an outstanding balance sheet apart from the heavy levels of dilution. If that gets under control and the company becomes profitable, I think we're looking at a near perfect balance sheet in the next few years. Given the status of the balance sheet, I think it's a good time to look at the company itself and see if the story there is as good as the one on the balance sheet. Currently, Duolingo is in growth mode, and it definitely shows. It seems like every time the company reports earnings, they're raising future guidance. Even after the explosive growth of the platform in 2020 and 2021, the company is on track to to grow another 40% this year as well. The main driver of Duolingo's success is its incredible ability to test new engaging features on the platform. The company calls it A/B testing, and it's when they show a group of users a new feature to see if it keeps them more engaged. If it works, it becomes a core feature of the platform. So even if there are better programs to learn languages faster and more effectively, none will be as engaging or fun as Duolingo. This in turn leads to more user engagement and ultimately more revenue. This rigorous A/B testing philosophy has led to 3 massive benefits for the company. User growth is the most significant benefit. Daily users of the platform have increased 44% year over year to over 13 million in total. Of these daily users, over 3 million of them are subscribers to the platform, which represents over 70% growth year over year. This second benefit is very important to the overall revenue of the company. And the third is subscriber penetration. While over 90% of Duolingo's users don't pay any money to use the platform, that is quickly changing. In the first quarter of 2020, only 3.6% of total monthly users paid for Duolingo Super. Now, just over 7% of monthly users are paying for the expanded Duolingo experience. All 3 of these benefits are what has led the charge in Duolingo's growing revenue by 50% year over year. This is especially impressive when you realize this growth is against very tough comparisons from the last 2 years. While the bulk of the revenue of the company is the subscription-based Duolingo Super, there are several other areas the company makes money. The second largest business segment is advertisement, and while I personally don't like advertising businesses so much, it's an important segment for many companies. I understand Duolingo wants to have that high margin ad income to further grow the business. As more users join, this segment is likely to increase, but personally I would like to see subscriptions remain their primary source of income. Another smaller part of the business is in-app purchases. These are often gems that users can buy to save their streak or have various other in-app rewards. It only makes up 5% of the company's revenue, but it's also the fastest growing business segment with year-over-year growth of 180%. The last business segment is another relatively small piece at just under 10% of revenues, but it's Duolingo English Test, or DET. This particular segment has almost completely transformed a very niche market, the English literacy test. College applications employ these to see whether or not international students have a good grasp of the English language. And at just $50 per exam, it's fairly affordable and has been taken over 500,000 times. DET's success makes a compelling case for Duolingo to expand into new verticals of education. I also believe this is the plan. Interestingly, the company does not outright brand itself as a language learning platform, but instead a platform to make education easier. This phrase is why, in my view, the company should and will end up expanding into new verticals of education. It wouldn't have to be restricted to language, but could be anything from math to history, or basically any school subject. I compare the idea to Spotify and how it's moving to become the all-in-one audio creator platform. Duolingo could very well do the same thing, but with education. Of course, that's purely hypothetical, and we must unfortunately engage with reality as it is. Right now, that reality is that Duolingo currently only operates in the language learning space, but just imagine the possibilities. But if you want to support a platform that is rapidly growing into new verticals, consider subscribing to help the dollars and cents empire grow just a little bit larger. As much fun as it is to imagine Duolingo becoming the Spotify of education, there are several big problems it has to face in the future to preserve this ideal outcome. The first and largest is, much like many other tech companies, competition, but from an unlikely source. Google is perhaps the company most synonymous with the word translation, with its flagship translator being used the world over. It's actually Google's translation tech coupled with the emergence of VR, specifically AR, that gives me pause. Right now, you can have a conversation with someone who speaks a completely different language through Google Translate. It's rough and clunky and nuances may be missed sometimes, but it's possible to nearly eliminate the need for learning another language. As the tech gets better, it'll only become easier and easier for people with different languages to effectively communicate, especially as we become more integrated with our tech. Imagine being able to have a different language conversation with just a smartwatch, or going even deeper, a pair of glasses, or even scarier, contact lenses. It's possible we could even see this technology by the end of the decade, and while I don't think it will completely eradicate the language learning industry in that time frame, I imagine it will still do significant damage. But a more present danger to Duolingo is that of valuation. As I said earlier, despite being cash flow positive, Duolingo has yet to turn a profit. This means Duolingo shares are worth $0 since a return is just based on the sum of all future profits, and since there currently isn't any profit, it's hard to properly value the company. Sure, you can model out the future, but we need hard evidence now. In the next few years, I believe Duolingo will start feeling the pressure from investors to cut costs and try and get on track for profitability. How long that will take is anyone's guess. Of course, I don't believe shares are worth $0 since it would be dumb to not model some future profitability, but we'll get to that in a minute. Right now, I think the best course of action is to avoid Duolingo. The company has a lot to figure out from profitability to long-term scalability. On top of that, the high amounts of shareholder dilution will erode your ownership in the business over the next few years. Given the unprofitability, I don't see buybacks in Duolingo's future. If you are willing to take the risk on this founder-led company that is still growing 50% per year, I wouldn't blame you. I just don't think the risk is worth it. So I'm not and will not be a buyer. Given all these concerns and the fact that my portfolio is already heavily invested in tech and I don't want to overweight it even more. Plus, based on some reasonable profitability assumptions, I believe shares are worth between $65 and $70. But again, I find this company fairly hard to value. With that said, that's all I've got for you in this video. If you enjoyed it, I'll bet you like the one on screen now. Tell me your thoughts on Duolingo and whether you own the stock in the comments below. And as always, this is Dollars and Cents.